Okay, welcome back to Stock Talk with Josh and Niko. We're going to continue going through some of the slides on the PowerPoint that Vince has provided for us today. And the first one is we're going to start off with is about what a correction is in a financial market.
Yeah, so a correction is a decline in 10% or greater of the price of anything. In real estate, it'd be a 10% drop in the home price. Right now, we're seeing appreciation of around 6%. So we're nowhere near having a correction in the real estate market right now. But that doesn't mean things can change in the future.
All right, Josh, what's our next slide?
It says showing skyrocketed the last 2 years. So, Vince, can you let the people know what exactly does this mean? Because there's a lot of numbers I'm looking at.
Yeah, so that gray spot in the left, that's pre-pandemic. And in the right, when it all turns blue, that's after COVID hit. So that's the number of showings. So just think of it. If people are out there looking at houses, that's what really shows where our demand is. So when those numbers go way up there, there's lots of people looking for houses, and we just don't have the houses to give them.
I see.
Yeah, and even I think remember like during COVID, do y'all remember like the big problem that was going on with renting houses? That was like a big story in the news too. So that's kind of cool thing to look at as well. So, but the next part of the slide that we have is showing the average number of offers that we have. So is that's like say like different houses, right?
So that's one house goes on the market, and it's on the market for say 1 or 2 days, and 4 or 5 people make an offer on that house on the same day.
Okay.
So if you look in Indiana, I think we're at around 4 to 5 offers per house that gets listed.
Yeah.
So that's just another thing showing you it's a strong seller's market. There's tons of buyer demand, and that buyer demand is pushing those prices up. So a lot of houses say you list something for $100,000 or $150,000, it might sell for $160,000.
Right.
You know, because there's so many people wanting that same house, they're all fighting for it.
Okay. Yeah, I remember I think about this time last year, about a year ago, the house on my street went up for sale, and I want to say within a couple of weeks there was 8 offers on that house on my street. So yeah, the demand is super high.
Yeah, and I personally even know a bunch of people. My mom, one of them, is actually looking for a house now too. So yeah, I do see it. But now the next slide we got is the current mortgage rate compared to the last 5 decades. So if you can actually look at the chart too, it looks like it's actually been going down, honestly.
Yep.
Yeah, well, this is only showing the 2010s. So we were in around the 4 on average, but that line is showing the current rate of about 5.09. So it's going up a little bit, but we're still historically below where we've been. So I still recommend buyers to buy this year rather than waiting because people think things are going to drop. The prices on these houses, I do not think are going to drop in the next year, but the interest rates are going to go up.
So now, is this kind of saying that the government kind of has, or the Fed kind of has less leverage to move stuff down if they need to, right?
Well, the Feds can do whatever they want with the rate, but they've said that they're going to raise it. And every time they raise it, it takes away the consumer's buying power.
Yeah. Now, do you know, do you have any idea when they raised the rate? So that, like, what is it, a couple of weeks ago they raised it, I want to say, 0.75%? Something like that?
I'm not sure that the number.
Something like that. Now, how long do you think that will take to have an effect on people and their spending habits?
Well, as far as the mortgage rates or
let's say for mortgage rates, yeah.
So it'll hit that mortgage rate pretty quick. The lenders, when they see an increase, they're adjusting that mortgage rate pretty quick after.
Right.
But I don't think it's going to stop people. I mean, if you need a house, you're shopping for a house. It's not going to make it so you don't need a house. You still need that house to live in.
Yes. And so it kind of goes back to what you said earlier, where although the interest rates are going up and people won't be able to afford the houses they could afford 2 years ago, they're still going to get a house. It's just going to be a less expensive house.
Exactly. So that's the frustration. When you think, well, I could have afforded a $500,000 house last year, and now I can only get a $400,000 house. It's kind of disheartening.
Right.
But if you wait till next year, you might only be able to afford a $375,000 house.
Yeah. Yeah. So I could see where it doesn't. We don't really need to have a huge correction or a crash in the housing market if people are still they're still going to buy. They're just not going to buy the expensive houses.
Yeah,
that's it.
I mean, what would have to happen to have a crash is you'd have to have tons of supply and no demand.
Right.
But we're not seeing that
And
right
we're not
now.
even close to that,
We're
right?
not even close
Okay.
to it. You know,
Okay.
we're not like 2008. Everybody keeps comparing it, saying, "Well, look what happened in 2008.
Yeah.
All the prices tumbled." Absolutely, they did.
Right.
But what happened there was they were giving out all this loans, and people didn't have the money to buy these houses, but they gave them the loans. And when all those things started defaulting, well, the whole market flooded with houses, and nobody could keep their houses. So they were underwater. They had no equity in the house they had. So even
Yeah.
if they sold their house, they couldn't sell it for what they owed.
I
Right
see.
now, because we've had all this appreciation, people have got equity. So
Yeah.
even if they do lose their house, they're going to
They're
walk
gonna
away
make
with
some money. Right.
Yeah.
Yeah.
Now, can you walk us through when in 2008? What was your experience like, and what did you own at that time, and what did you have to go through?
So in 2008, I just had a few rental properties and my own house, and I didn't sell anything, so it didn't affect me too much in the real estate market.
Okay.
I did have stocks, you know,
Right.
when we were
And
playing.
that's something I want to get into too. So prior to 2008, you were investing in stocks.
Yeah,
Right.
I was investing, but I didn't know enough to really do
Okay.
it wisely, and I invested in stocks that looked like they were promising, and a lot of them went,
Well, were you
belly
doing
up.
it through like a retirement thing, or were you picking individual companies?
I was picking individual
Ah, I
companies.
see. Okay.
Yeah.
And did you invest? Were you in any index funds?
No.
No. Okay.
No.
So what type of companies were you investing in, or what was your thinking strategy like?
Well, I was in IT, so it was
Okay.
all tech companies.
Oh, okay.
Yeah.
Okay.
But, a lot of the tech companies went bust.
Yeah. So once 2008 hit and then everything crashed, then what did you think at that time as far as getting back into stock market investing?
I never looked.
You never wanted to do it again?
Emotionally, it tore me up. Yeah, it's like when you lose at the casino, you don't want to go back. That's
Yeah.
how I felt.
But you got to
Wow.
go back. You got to go back.
I know it's been 14 years now.
Yeah.
You know, all
Wow.
you needed back then in 2008 was the stock talk with Josh and Niko.
Yeah.
And now we're here. Now we're here. You can always go back. Always go back.
Mm-hmm.
But I will say I do like the thing you said about the demand. People gonna always need like a house or somewhere to live.
Mm-hmm.
Like it's not like the new Jordan shoes, not like a belt, like any designer stuff, anything like that. Like people need things as like food and shelter and water.
Yeah.
Those are three things that people need, and the demand is always gonna be up there. So I do like
So
that.
the other thing I want to ask you too is, so let's say your experience with stocks prior to 2008. How do you feel? Like, what do you think the main benefits are, or the pros to real estate investing versus stock market investing?
Well, I think you're more in control of your own destiny with
Okay.
real estate. I mean, you own brick and,
Yeah.
you own a physical thing, and somebody's decisions at the corporate level can't really affect you.
Right.
I mean, obviously, government can make rules and stuff that change your profitability if they change the way we get taxed. But you're in control of that house. You're in control of the tenant that you put in that house, of the maintenance you do, the longevity you give it.
Right.
You're just more in control of that investment. That's
Yeah.
why I like it.
So the other thing I wanted to ask was, how would you compare? Let's say someone who was going to start getting into real estate investing. How do you compare flipping houses compared to a rental property? And which one? What are the pros and cons of that?
So I've done both. Obviously, when you flip a house, it's typically going to be a short-term capital gain, so you're going to have to pay taxes on it right away.
Oh, okay.
But there's there's benefits. You don't have to deal with renters. You don't have to deal with people damaging your property or late rent payments, whatever. There's advantages in doing
And
it.
it's kind of quicker. It's a quicker money that you get a big sum of.
Yeah, I mean,
Yeah.
my biggest problem with that is the contractor. There's a shortage of good contractors, and
I
it's
see.
hard to find people. But if you got a team that really can do those houses,
Yeah.
you can make money and you can flip it.
I see.
If I had the skills myself, what I would do is probably buy a house every 2 years, live in one, and then sell it in 2 years. Because if you live in it for 2 years, you don't pay any capital gains tax when you sell
Oh,
it.
I see.
So you could buy another one every 2 years and keep making that money.
So now, like with the stock market, the capital gains tax is similar. Where if you sell the stock within a year, then it's gonna be like a normal income tax rate. But if you hold it for over a year, then it's a long term thing, and the tax rate is much lower. So is that the same way it works with real estate?
It is,
Okay.
with the exception of there's depreciation you take out on your rental house every
Right.
year. You take out, it's 27 and a half years you can depreciate a rental house. So when you go to sell it, you also have to pay back the depreciation that you deducted
I
throughout those
see.
years.
Yeah.
I
Okay.
see. Interesting.
Yeah, because I was actually just going to ask you that question. Like, what about the depreciation? But okay. Like, say if I live for 2 years, if there's any sort of depreciation, things like that.
Okay, another question. One of our last episodes we did, I don't know if this was Josh. I don't think this was what episode was with AJ?
30, I believe. Yes.
30 or 31, either one of the recent ones. She's a financial advisor, and we were talking about investing with a Roth IRA, and she said one of the ways that you can avoid paying taxes on your stocks is if you take the money out of your Roth account, even when, let's say you're young, let's say you're 30 years old or something, and you use it to purchase your first home, then you don't have to pay taxes on that money. So do you know, is that how it works?
Yeah, so I do invest in my Roth account, so I've got knowledge of that. But you can't do it in the house that you live in. That's a thing that they prevent you from doing. So you can definitely do it for a house that you rent out. You can rent it out, but when the people pay you rent, the rent's got to go right into that Roth. You can't ever touch that money. It has to go from your tenant right to the Roth, and you cannot use it. If you need a new roof on that house, you have to pay for that roof out of the Roth. You can't pay for it out of your own pocket.
I see.
So you got to make sure you got enough money for the maintenance, and you got to make sure that you don't touch that money because you can get yourself in trouble
I see.
if you touch it. And you can't live in it, and you can't sell that house to your brother or your father, anybody who's related to you.
I see. Okay.
Can I sell it to, let's say, my wife's cousin? We have different last names.
I don't know how far it has to be, but it has to be where they say it's not a disqualified person.
Yeah.
Okay. Well, I don't want to talk too long because we're coming up on a break, but we will be back here on Stock Talk with Josh and Niko. Now, please, people, don't go anywhere. Don't go anywhere. We're having a great conversation here, but you are now tuning in to Jet TV Network on Stock Talk with Josh and Niko. See you soon.